All right. Looks like we're recording. I'll get started. My name is James Pepper. I'm the chair of the Vermont Cannabis Control Board. Today is Wednesday, September 24th, 2025, and I call this special meeting to order. I think I'd like to just update the agenda quickly and add a second public comment period at the end after we kind of get through our discussion with CPPC for folks to kind of comment on things that they've heard. Give us any thoughts and reactions, and we'll talk about some next steps. So, is that all right with everyone?
Yeah, it's great.
All right. So why don't we just go ahead and move to public comment per the agenda. Do this the same way as always. If you have a comment and you join via the link, please raise your virtual hand. If we have anyone by phone, you can unmute your phone by hitting *6. Dave?
Thanks. Not to preempt the conversation, a thought that keeps coming back to me on license fees is around the wholesale fee. And let me just preface by saying I have a wholesale license, so there's a little bit of self-interest here, but I think that the wholesale license is woefully underutilized in this market, and that it could be a very good solution for some of the access to market problems that the 400 tier 1 growers experience. They have small production runs. They have long routes to take to get all across the state. Some don't have selling skills, great growing skills, but not good selling skills. And we haven't really seen any kind of grower cooperative wholesale distribution in this market. A little bit, but not much. And there's only, I think, 8 wholesale licenses outstanding. And I think one of the problems in utilizing that model is the fee. I think it's $4,000. The wholesale license is not lucrative in and of itself. It's not much of a business in a small market. The margins are very thin, but as a tack on to a grower license for a bunch of growers working together could be a interesting path to market. Where people can leverage the people who do have good selling skills, or the people who have reliable transportation, or better storage facilities. And so I would recommend dropping that fee down a lot, to maybe $1,000 a year, and in the hopes that you get more pickup of it. It's not a big, even though it's a big drop per license, it's not a big drop in revenue because there's only 8 licenses.
Right.
And so you might even be able to make it up with a greater number at a lower fee. So that's just a thought that I keep having about the market, and I wanted to share. Thanks.
Dave, before you go, can I ask you a question? I know this is kind of a odd way of doing things, but we of course been, we were asked early on whether we should create a co-op license or explore that. We thought that the wholesale license actually covered a lot of that, and we didn't need a novelty co-op license. But you were involved with writing the one license per entity rule. If we had wholesalers that were acting as kind of like the exclusive purchasers of certain cultivators, do you feel like it runs into a one license per entity problem? Essentially a way for a wholesaler to stack like a number of cultivation licenses?
That's an interesting question. I think, as always, the one license rule analysis is very fact specific. I don't know that in and of itself, having an agreement with a wholesaler to take your inventory would violate the one license rule by. So let me back up. Let's say you have 10 growers and they jointly own a a wholesaler, and they have an agreement between the wholesaler and each of the growers to acquire and resell. I don't know that that in and of itself would be sufficient to vest control in licenses 2 through 10 in licensee number 1. I think you would need to do a really deep analysis of kind of what that structure is. And I don't know that single source kind of contracts are necessarily controlling. They certainly can be if it includes being able to tell the grower what to grow, when to grow, how much to sell, right? How much to sell for. That would seem controlling. But yeah, interesting question.
If it were a co-op, it would have a board, meaning that the licensees participating would have say.
We would have to really just look at the governance structure and
Yeah.
make sure that there's no,
Yeah.
it's not like one entity owning all 10 cultivations.
No, it would be more like multiple cultivators owning one wholesaler versus the wholesaler owning the cultivators.
Thank you, Dave. Great recommendation.
Yeah, and I think there's a number of recommendations from CPPC that will kind of speak about the need for shared infrastructure, kind of regional like hubs for either testing or collection or, warehousing.
I think it's just been one of those things where we can only do so much to encourage folks taking advantage of opportunities, but how can we highlight you can do X, Y, and Z with this license as a way that maybe we can fill some of that void.
Well, and removing some of the barriers to doing
Sure, of course.
Sorry. Yeah.
Sorry, we are in the middle of a public comment. Jeffrey, do you have a comment you'd like to make?
I do, Chair. Good morning, everybody. Can you hear me okay?
We can.
Terrific. Thanks for this meeting. Hope everyone's well. CPPC, good to see you. I look forward to this discussion. Thank you for your work with our state, and I look forward to seeing what you have produced for us. For the record, Jeffrey Piscitello, Executive Director of Vermont Growers Association. We are the state's largest member-based nonprofit for this sector. I'm very proud of that work in our member base. Though we have growers in our name, our members do represent the entire supply chain. We're proud of that work. Just sort of very briefly, I don't want to take up too much time. I just want to share, notably with CPPC and everyone that's attending, Vermont is at an interesting place right now. We're about 3 to 4 years in to this adult use marketplace. And we are really beginning to feel, and when I say we, I mean licensees and consumers, the constraints of what, I want to say that one of the world's leading cannabis economists, Bo Whitney, characterized as a outdated retail-centric market model. Vermont has that. Nearly every adult use state has that. It is currently constraining the market's potential for growth. And another point that he raises that I think is of relevance to this state is not only does our enabling statute task the agency with transitioning legacy farms, cultivators, and businesses, but in that equation is also the necessity to transition legacy customers. Bo details that in 2024, of all of the adult use states, approximately 30% of total cannabis sales were captured by the regulated market. So that leaves approximately 70% of a state's potential customer base is not engaging in the regulated space. That is very much what we see here in Vermont as well. Vermont is at a crossroads. If we do not continue to make policy decisions that move us away from this outdated model, we will find ourselves in similar situations as other states. I'll leave it there. Again, I look forward to this discussion and thank you all. Have a good day. Have a good meeting.
Are you familiar with that particular report?
Yes.
Okay.
Yeah. Anyone else for public comment before we move into the substance? And again, we'll have another one after CPPC presents some information. No? Okay.
I'm just going to give my computer.
Oh, yep, sure. Nick?
Hi, thanks for having this meeting. I was going to Sorry, my wife needs to turn down her speaker. Okay, sorry. I was just going to suggest that maybe we readjust the different tier structure in terms of how much canopy per tier, and like maybe boost out the tiers to more than just 5 tiers, while not like allowing for more canopy, but like lock it in at 500 square foot increments while creating like a micro tier at the bottom with a much more affordable rate, maybe like $500 for the licensing fee. There is a precedent in the state of Montana. They have a micro tier that's 250 square feet, which is probably a little too small, but they have like 11 tiers. And then with the provision in the new Cannabis Control Board rules, with tier relegation, it could kind of put the bigger cultivators more or just kind of lock in the market at a more size appropriate level, just where we are, so that the oversaturation doesn't get worse. So say you'd have like 500 square foot canopies tier, micro tier, then 1,000 for tier 1, 1,500 for tier 2, 2,000 for tier 3, and so on and so forth, and then maybe kind of readjust the pricing for all of them, but while having the intention, having the micro tier be extremely affordable for the smaller grower, because there's many tier 1s that aren't even using half of their tier 1. So that'd be one way to just ensure that, or maybe just like kind of give the smallest growers a little more of a chance of staying in business. Thank you very much.
Thanks, Nick. Any other comments? All right, I will close the public comment window and just move to the agenda. So today, this is a special meeting that we called because the legislature asked us as a board to write a legislative report. I'm just going to kind of paraphrase here, essentially how to adjust our fee structure to better support small craft cultivators and social equity licensees, and also to think about how we can do economic development in this space better than what's been happening currently. Vermont does a lot of economic development for other industries, particularly the ag sector, and they do very little to support the cannabis business, despite the fact that you are all generating quite a bit of money for them. And I think they, particularly the Senate, was interested in, what are the issues and how can we help fund solutions to them. And so part of what we did when we were out for contract for consultants to update our market analysis was we added a few other projects in for the consultants to consider. And CPPC, I don't know if a lot of people have met you guys, but and I've known Eric for quite a while. He was the former head of the Maine regulatory program. You guys over the past couple of months have been meeting with folks, holding some listening sessions, some stakeholder engagement groups. And I know that you're starting to kind of formulate some basic recommendations. You've also looked at some of the Vermont programs that we have and some of the other cannabis economic development that's happening in other states. And I thought it'd be a good opportunity for us to hear kind of the overview of what you guys are thinking and have that inform some of the board's conversations moving forward while we write this final report, which is, again, due November 15th. So I was hoping maybe you guys might introduce yourselves quickly and just jump right in. And I was hoping for this to be kind of a dialogue between the two of you and the three of us. And, just for the sake of time, I think we're going to invite people to kind of comment after you guys have finished your report, and then, try and have a conversation with the people that joined from the public about their reactions to this, whether we're on the right track, whether we need to kind of be rethinking things.
Yeah, perfect. That sounds great. Happy to do introductions. So first of all, thank you to the board for the invite for us to kind of go over some of our high level findings from the work that we've been doing. My name is Eric Gunderson. As Chairman Pepper alluded to, former executive director of Maine's Office of Cannabis Policy. I was in that role for about 4 years, helped launch their adult use market. The past 3+ years, been working very closely with Cannabis Public Policy Consulting, Hannah, her team, CPPC, we're a cannabis consulting firm that works with state, local, and tribal governments on all things cannabis. And then, so as the chairman had mentioned, we're working on a number of different projects, but the one that we're talking about specifically today is really that assessment of the market and things that the board can be doing to support not only the smaller cultivators, but also social equity licensees. So over the last, I don't know, couple months, Hannah and I have talked with several licensees, wonderful folks that are in your program, and got a better understanding of kind of their day-to-day, their operations, what they view could be of value to them as smaller cultivators and social equity licensees in Vermont's what I call cool and quirky cannabis market. So with that, we do have a small presentation to kind of go through the work that we've been doing, the methods that we've been using, the conversations that we've been having, and some high-level findings based off what I call like 4 different buckets. And then we also pull in some examples of some initiatives, policies that other states have used to address some of the findings that we've uncovered here in Vermont that maybe make sense. Obviously, we would need to adjust them and make them specific to Vermont. But that's pretty much it in a nutshell. So I can hand it over to Hannah. She can introduce herself, give a little bit of her background, and then we can get right into the presentation for everyone.
Thanks, Eric. Hi, everyone. My name is Hannah Boyan. I'm COO of Cannabis Public Policy Consulting. I won't spend too much time. Eric hit it on the head, but we are a full-service cannabis implementation and research firm. So we help states set up their cannabis market, and then we also go ahead with research, help them improve their market. So I will go ahead and share my screen, and we can get started. One second. Okay, I am so sorry if you guys are looking at yourself right now. Okay. Everyone see my screen?
Yes.
Yep.
Perfect. Give it a second. Okay, perfect. So as both the board and Eric introduced, this project focused around getting insights from both Tier 1 cultivators and social equity licensees in Vermont, and looking at different market challenges that they're having and different support opportunities that the board may consider to implement to help out the Tier 1 and social equity licensees. And board members, please feel free to stop me at any point during the presentation. You are a pretty small screen when I'm sharing, so feel free to interrupt me at any point. Okay. So project goals and approach, there were 4 main goals when we set out to start this project. The first goal was to identify any critical barriers that were impeding the sustainability and the success of Vermont's Tier 1 and social equity licensees. We wanted to analyze the applicability of external support models from both agricultural and cannabis markets. So see what other states and jurisdictions are doing, not only in cannabis markets to help support their businesses, but also take a little bit of a broader look at greater agricultural markets. As Chairman Pepper mentioned, a lot of states have pretty substantial agricultural support set in place. So we thought since the agricultural markets have been around a little bit longer, we would have better success at seeing what programs are actually successful or not successful when we're looking at these smaller licensees. We wanted to test the viability of support interventions through licensee and staff engagement. Basically, that's just a fancy way of saying we wanted to make sure that the support concepts that we were researching and coming up with actually resonated with the Vermont market and that licensees were actually interested in them. And then we want to generate some actionable policy recommendations that reflect both the data and the lived experiences of the licensees and the staff members that we talk to. So we didn't go into this analysis completely blind. We wanted to have some sort of information when we started building the focus group questions. And the board was gracious enough to share with us a 2024 Tuck School survey report that was basically a general quantitative survey that was released into the market that was able to get some pretty basic level insights on what is going on, what licensees might be struggling with, what are they excelling at, and what kinds of programs would they be interested in. So with that, we took that data and reanalyzed it and was able to come up with some questions for the new focus groups that we had put together. And then also to inform the questions that we had put together, we started with the overview of the existing support models. So like I said before, we did a review of small business, agricultural, and cannabis support throughout the nation. And when we did this, we found main four categories that these programs fit into. There was financial support, business and advising and mentorship, marketing and branding assistance, and regulatory navigation. Pretty interestingly, these main four categories actually paired very nicely with the Tuck data when we were looking in that data to see what licensees would be interested in. These matched pretty one-to-one on what other states are seeing in both the cannabis and then also in other agricultural markets to need special support. So financial support, business advising and mentorship, marketing and branding assistance, and regulatory navigation. And so when we were looking at the overview of these models, we were finding that mainly they were focused around keeping costs low, especially entry costs into the market, being able to build and expand operational capacity, improving market access, especially for small farmers, and then streamlining compliance burdens, especially in cannabis, not so much in other agriculture sectors. There is a pretty heavy compliance burden put on the cultivators, which is not seen in other states. So looking at other ways to kind of streamline that. So some examples that we were able to find, especially ones that have had positive outcomes from these programs. Minnesota's Beginning Farmers Tax Credit. This was a tax incentive program for landlords or people who owned the land that was renting to these small agricultural businesses, basically incentivizing them to lease their land to smaller farmers. It actually had pretty good success in shifting people from leasing their land from maybe a bigger company to a smaller family-owned farm. California's Farm Loan Program, that's pretty self-explanatory. It was small, low-interest loans for small agricultural businesses. New York Agricultural Business Coaching was very interesting. It was a program that was put in place in New York to provide administrative business support to small agricultural businesses, so people who maybe are really good at growing their crop, however, they are not good at marketing or have not done with website design, things like that. Washington's Regional Market Program was something similar, provided marketing support to these small businesses, these small agricultural businesses. And then last but not least, ones that I wanted to highlight for you guys today was Colorado's Reduced Testing Allowance Initiative. This one is actually a cannabis program in Colorado that allows operators that have had success with their testing compliance, so they weren't failing tests for a long time. It allows them to opt into this testing allowance initiative and actually lets them test their products a little less often once they've met that threshold. So when we were doing an overview of these models, we were looking to see elements that Vermont could adopt from these programs that could support the tier one cultivators, but then also social equity applicants. So we took all of this and we helped develop the questions for the stakeholder groups.
Anna, can I ask you about the Colorado reduced testing
Yes, of course.
allowance? I think I know basically how it works, or the just high level how it works. Can you talk a little bit more about it and whether it's been successful? I mean, or it's had unintended consequences, maybe?
I haven't seen anything of negative unintended consequences. Basically, what the program looks like is they allow, I believe it is cultivators and manufacturers, that if they have had 2 years of successful tests, so they weren't having any major red flags or they weren't failing their test. I think it was around like $4,000 they had to pay to get this special, it's not a license, but it's like a certificate that they get that basically allows them to test a little less often. Eric, I'm not sure if you know the exact specifics, but I think do they like test like half of their product?
Yeah, I mean, for the sake of the conversation, it's exactly what it is. If they have a proven track record over 2 years of no failed tests, there basically it's not. In Colorado they don't use the terminology a variance from their testing requirements, but it's basically an allowance that says you don't need to test as frequently and as often as every batch if you have that proven track record. Um, we can certainly get the board the specific details as far as like the batch amounts and the panels and the frequency, but it's basically a variance from testing every batch for every panel with that proven track record of 2 years of no fail tests.
Okay.
Are there compliance? I mean, I don't know how far you want to go down this road right now, but are there compliance requirements on the other end? Are they required to follow a certain like good manufacturing practice or things like that in order to achieve this or in order to maintain it?
I don't believe they have specific good manufacturing practices in place that's like a criteria. Obviously, they have their specific public health and safety regulations that just kind of are embedded and live in their regulations. But it more has to do with the track record of no fail tests for those panels for those item types.
Thank you.
If we were, I mean, the conversation at Canra all the time is, should we be moving towards CGMP for our manufacturers? And should we be going beyond CGMP? To me that, that requires a lot of testing. So it seems like that would actually be more expensive. Like we were thinking, if someone's certified CGMP, then we could reduce their testing, or we could create this reduced testing allowance initiative. But I think that would actually probably be more testing and more compliance costs.
At least the start.
Yeah, and the cost to be able to be certified as So yeah.
I had a question, not about the testing allowance, but just generally speaking, obviously there's some really cool, as you alluded to, Hannah, really cool ways that various states around the country have looked to kind of help smaller craft farmers. Have any of those states, the ones you mentioned or otherwise, have you seen any kind of, obviously a lot of that money, at least historically, has come and flowed to the state through USDA and other sources of federal funding? Anything you've gleaned on if any of those states have tried to kind of find a way to kind of do what they do well and translate it to the cannabis market that they have in their state, other than the reduced testing initiative?
That's a good question. I would say what I have seen in other states, and I'll focus on like Minnesota, and they're a little hard because their cannabis program is just getting
Like
up
just
and
started.
running.
It just started like last weekend.
Yeah, I think their stores just launched. But I think, for example, they are similar to Vermont in the sense that they do have a very strong, small agricultural, like a strong
Like a
small
specialty
business
crop.
agricultural market. Yeah, like a lot of small farmers or like family owned farmers. And I do think how their licensing model is trying to translate that. For example, like they put pretty heavy caps on anyone that's trying to do like vertical integration, or if they are trying to have like a really, really big operation, they are definitely focusing more on those micro licenses. Like I said, they are such a new market that they haven't done many like support programs per se to speak to. But that's really where I'm seeing it. It's more of how they are setting up their structures, not necessarily support programs that are pushing to benefit to benefit them similarly to how their other agricultural markets are set up. Eric, I see you came off mute, so feel free to add on to that.
And I don't think this necessarily answers your question directly, but what's also interesting about this project is when you do a review or are just kind of in general familiar with these types of programs and like their underlying objectives of supporting the smaller licensees or social equity licensees. Primarily, like the initiatives are focused around startup. Like it takes money to open the doors of these businesses, get into compliance, establish a footprint, have like the infrastructure in place to have a license and be successful moving forward. It primarily starts at the beginning of a program. So what's really interesting about this project is it's already been alluded to. We're already in year 3 or 4. We have some level of maturation with the program. And now it's a look back of what are things that we can do at this point in the program's life cycle to support these folks. So a lot of times, like when you're doing what is working well in state A, B, and C, and how can we make it translate? Again, the vast majority of these programs for upfront. So it's kind of unique in the sense, and I think it's wise of your legislature and the board right now to be doing this because it's kind of an exercise quite honestly, every program should go through too. But again, unique to the fact that Vermont, you guys are centralized really around and made a priority. We're going to have a market made up of these smaller operators. So the importance of this exercise is, well, it's an important exercise to go through, I guess is what I'm trying to say.
No, I'm with you, Eric. And I think there's distinctions between incubation, which is where a lot of these examples kind of live, and acceleration, right? Which is, I think, where some in our market need to take that next step in the face of not being able to really rely on the typical agricultural economic pressures that live in just about every other ag adjacent industry.
One thing, Eric, not to just dwell on all this too much, because I know that there's a lot more to get through, but one thing that's always been a little bit of a kind of square peg, round hole situation for me is we are a regulatory body. We're not an economic development body. And so it's always, we have the Agency of Commerce and Community Development that's willing to kind of manage this cannabis business development funds. But they want direction from us as to what to do with it, how to do it. And then, but if we try and cross that line too fully, then it puts us in a weird situation. I feel like, I mean, it's probably fixable. Like there's probably firewalls that we can establish between the people that are doing licensing and compliance versus the people that are trying to kind of support businesses or kind of review grant applications or whatever else. But that's always just been, you mentioned that it's something that most, states should be doing, but I'm wondering if it should be happening at the board or if it should be happening elsewhere.
Yeah, I couldn't agree more. It's certainly a fine line to walk, and I don't think there's a right answer of how you do it. A lot of these states and the agencies that run the programs, as you already well know, like all the, I don't want to say power, but all the authority is centralized. Like you have agencies that will do everything from licensing, compliance, to reviewing grants, to like providing these types of initiatives and programs to support. And then there's a lot of states that do it the decentralized model where you're leveraging the expertise and infrastructure from departments all across state government in order to do this. So I don't think there's a right or wrong answer, but certainly for agencies where it's more centralized, to your point, there can be that fine line to walk. Like, where are we going too far where we're kind of like getting too far beyond our skis on other authorities that we have, like ensuring compliance within the program to protect public health and safety. But there's no right or wrong answer here. But totally understand what you're saying.
Yeah.
I mean, yeah, it's tough. I used to work at VAFM and I worked in agriculture development, and the divisions next to us were the ones that enforced while we gave out grant opportunities. But Vermont's also, you said cool and quirky at one point, Eric. I don't think that's true in cannabis. That's true in other parts of our commercial and agricultural portfolio. Like Vermont is one of, I think maybe one of the only states that EPA has granted their water quality enforcement authority to an agricultural agency, not to the environmental equivalent at the state level. So like you've got some interesting quirkiness to how Vermont treats agriculture.
I think that's where the check and balance is, though. Like if you look at the mission that we were given by the legislature, effective is part of that. Right. I don't know how you run an effective program if it doesn't contribute to the economy, right? So I think there's meant to be some kind of partnership, but you're right. Not not completely purist, right? Not just economic and not just regulatory, but some marriage of the two in relationship with other agencies.
I know we've derailed a little bit, Hannah. Sorry about that.
No, you guys are good. This is great
We're on
conversation.
what, slide 1? Yeah. All right. Yeah. We'll turn things back over to you. These are just some of the conversations that always swirl around in my head.
And continue onward. Okay, so we wanted to do a reanalysis of the 2024 Tuck survey data, just have a fresh set of eyes, see if our analysis came up with anything different or had anything that we could glean that maybe they didn't provide in their initial report. So this was a survey of a little over 70 licensees, and they did purposely oversample tier 1 and then also social equity licensees, which is perfect because that is also the focus group that we were interested in. Overview of the findings: 72% report capital constraints, so issues getting access to money for their business. 63% face shelf space barriers, so they had issues getting their product on the shelves even once it was produced. And then nearly half of the respondents reported low confidence in compliance knowledge, and then fewer than 20% had any kind of access to mentors or structured support networks. So really what we're seeing is that we do have quite a bit of operators who are going through their day-to-day and don't really feel confident in their knowledge of the regulated industry, what they need to do to be successful, and have very few places to turn to get that support or mentorship to help them out. So, like I said, these data points kind of establish the foundation of the thematic analysis and the support recommendations, and also heavily influence the focus group questions. So we really took the background analysis of what other states were doing to provide some examples, took the data, merged them together, and created a set of focus group questions to help have guided conversations that we could hope get some substantial information for you guys with. Okay, so just a quick summary of the qualitative feedback from the focus groups. We ended up having 3 focus groups. 2 of them were a mixture of tier 1 and social equity licensees. And then the third focus group was a mixture of staff from different departments who had a lot of licensee interaction, but then also had backgrounds in like a program implementation. So kind of seeing feasibility of these projects within the CCB. When we reviewed and coded the focus groups, we had 26 codes that were able to fit nicely into 4 themes. So we had structural barriers, inequitable marketable access, capacity gaps in business operations, and then compliance challenges. So starting with structural barriers to success, I would say this is the bucket that we put all of the coded themes in that were related to general structural barriers that we see across the nation in cannabis markets. So for example, licensees constantly describe financial vulnerability, testing, packaging, insurance costs being unsustainable. We see this across the country. For example, insurance premiums are high for cannabis operators, as we all know. Mortgages can sometimes be more expensive, or rent. Testing is a cost that is seen throughout the supply chain and in every state. Many operators had to rely on personal savings or secondary jobs to keep their businesses running. This wasn't their sole source of income. And it was very interesting because, as you guys saw in the supports that we looked at throughout the country, there were a lot of grant and low interest loan opportunities. However, when we were asking questions around like low interest grant or low interest loans or grants, there was definitely a strong preference for fee reductions rather than having any kind of loan or grant program. It was a very common sentiment that the licensees would like to keep as much money in their pocket as possible instead of having to pay an increased license fee or pay their license fees and then get that money back in some kind of loan or grant. It was also interesting when we kind of probed on what, if there was a loan or a grant program available, what they would be interested in using that money for. Most of it was pretty high cost items, such as like manufacturing equipment or cultivation equipment. Or the other option that we heard a lot of is trying to buy the property where their business was, so that they didn't have to pay rent, or they would be able to own that property, especially since they would not be able to get any kind of mortgage because they are a cannabis company. Specifically from the staff, they noted that the elimination of the insurance escrow option for specifically the small tier 1 cultivators had hit them pretty hard. And then testing costs was also very particularly damaging for small operators. For example, if they had one batch that did not test good, that could be thousands of dollars that they just kind of had to throw away. There was also seasonal and geographic factors. So we saw disadvantages faced by outdoor growers, which is seen throughout the country. Obviously, in the middle of winter in Vermont, I'm sure it is very hard to do an outdoor cannabis grow, which could then constrain success. Like I said, these are all things that, while they are happening in Vermont, I would say very much mirror what is happening nationally in the cannabis markets, that there are just some structural barriers that cannabis operators must face because the nature of what they are growing and selling.
So can we pause here for a sec?
Of course, yeah.
I just wanted to touch on the insurance escrow and a little bit of the history there. This is a concept that Massachusetts had as well. It's just like, if you can't get insurance, you can put a $250,000 bond essentially together that can be accessed to pay out claims. $250,000 is impossible for many of our folks. So we said, all right, well, when we were drafting our initial rules, we said, all right, I think it was $50,000 or $10,000. I forget what it was. It was a substantial sum of money. But also, if there was truly an accident that there was a claim, it would not even come close to paying out that claim. So it was actually kind of the worst of all worlds, except the only benefit, I suppose, was that you weren't just dropping money into an insurer that you're never going to get back. At least at the end of the day, if you don't have any accidents, you still have that $10,000. But we decided that, because it was kind of in this neither here nor there kind of category, it wasn't actually doing anything substantial and it was a burden. We decided, and there was, a plethora of insurance options available. None of them are great. But we decided just to eliminate that and just have people move towards, these surplus line insurers. That's just a history of why we got rid of that. But we also have the authority to waive regulations. I mean, insurance is a statutory requirement, but we do have the authority to waive regulations for tier 1 cultivators. Could it ever be CPPC's position that tier 1 cultivators don't need insurance? I mean, that seems like kind of a risky proposition. I think if you took cannabis out of it and you said, should a small business have general liability insurance? I think the answer would be, of course.
Yeah. Well, and I think this comes out of, and I'll use the fun terminology that we're using, like a little quirk of the Vermont program. So it's very unusual and not typically seen in other state markets where you can have a cannabis cultivation facility like on your home property. And that did seem like something that has happened in Vermont, which I think very much plays along with Vermont wanting to support small farmers. A lot of people who farm do tend to live on the farms that they grow whatever crop they are growing. But it sounded like from the conversation, by removing that escrow option, there are licensees that, since they have their home is also their cultivation facility, since they had to get cannabis insurance, they're no longer able to get homeowners insurance. So there's an interesting dynamic there. So I don't ever think it would be CPPC's recommendation to not allow or to allow any operator not to have insurance. However, I think that does just kind of come from a quirk of the Vermont program of allowing cultivation to happen on home properties.
Is there a way to better thread the needle? I mean, the escrow alternative just seemed like, what's the point? It's not really enough, and it's costly, and it's still a huge barrier to just have money set aside that you can't touch unless there's an accident. You know, but I'm just curious if there's a better way that you can think of to thread the needle between this insurance issue.
I certainly see the paradoxical catch-22, whatever you want to call it, of this issue, and how certain small operators that are doing this at their home are struggling in unintended ways by what we've asked them to do. But it's also tough to say, we don't require you to have any form of anything.
No safety net. Well, and it seems like we heard that the escrow was a challenge for people too,
Right.
right? Like that was the impetus for removing it, was
Right.
that being able to have that money, or having that money set aside and unusable, was a problem.
To your point, like if we keep the escrow amount low, then what is it really solving if it ever actually needs to be utilized?
All right. Well, that's
On a more forward-thinking note, I think the first couple bullets can really help, based on the prior, or really informative based on the prior conversation around how we can kind of envision or repaint the wholesale license as something that can be utilized
Right.
a little bit more frequently than it is now.
I mean, yeah, I mean, one of the recommendations from the, Vermont sustainability report that you worked on at Ag was about setting up regional food hubs.
Yep.
I mean, is that a model? I mean, one thing that we hear consistently also, it's hard for someone who's cultivating down in Brattleboro to get their product up to Colchester for testing. It's like a full day trip.
Sure.
Is there a way to establish kind of regional cannabis hubs that could be one-stop shop for packaging, manufacturing, labeling, and have a way to kind of shuttle, be a central repository and then shuttle product to and from
You
Colchester?
mean like a wholesaler?
Yeah, exactly. But is that like the regional food hub model? Is that translatable here at all?
I think in ways, there's a number of food hubs around the state that do a lot of different services for folks, whether it's getting an animal slaughtered with shared, equipment, or transporting food in and around the state. There's a lot of opportunities there, and I think we'll see some recommendations, or at least other conversations we're having separate from CPPC around the state on how we can kind of move in a direction that kind of gets the interest, or at least piques the interest of some of those folks who have developed those gaps in the Vermont agricultural supply chain, to kind of see opportunity to assist here in ways they probably have not thought of before.
It makes you wonder if you could co-op insurance in this market as well. I don't know if pooling that risk is helpful or harmful. You're either pooling a risk that is really high, and so your expenses go up, or you're spreading the cost, making it better.
My conversation with DFR on this was the amount of money you would need to pool would be
A lot.
much bigger.
Yeah.
I mean, if the
Because
state
of
were
the
willing to
risk.
kind of, supplant that,
Yeah.
With a one-time contribution or whatever else people were adding to it, maybe it might work. But so maybe that's an idea. Let's see.
Okay.
I'm just reading through this one more time because this is a pretty important slide. Yeah, on the so I did ACCD when you're talking about the fee reductions versus loans or grants. So if you're a social equity applicant, you get more than whatever fee reduction I think would be allowed in a one-time beneficiary payment, which has now happened kind of, I think, 3 or 4 times. But they had the authority to do a revolving loan fund or grants, and they decided that the administrative burden for them and for licensees would be too high. And so instead of doing any sort of like competitive grants or revolving loans, low interest loans. They just decided we're just going to cut up whatever money is in this fund equally amongst all social equity applicants.
Well, and I think ACC doesn't typically do loans; they do grants, right? Yeah. For other things.
They were authorized to do loans.
I know,
in the law, but they don't really. Yeah.
There are a lot of other
Who collects? How do you right? Like, how do you ensure the loan?
There are a lot of other competitive grant opportunities in the state for ag and commercial businesses that go well beyond what a fee is for a cannabis license. That I think if that dollar amount was readily available to some folks, they might feel a little differently about, you know, reducing your $750 tier 1 license fee to zero. Versus being able to, whether it's a match grant or just a straight competitive grant, you know, get $15,000 or $20,000 to buy any piece of equipment. I think if we have more information on the opportunities that may exist for some folks, that their opinions there may change. But yeah, that's what take that with a grain of salt, you know, because you've still got to put yourself out there and apply for the competitive grant and put together a good application and then receive that competitive grant, you know.
Yeah. Although loans are, if you can take a loan, pay it back, that's good for your business in terms of your general rating as business. So and banking is different 4 years in than it was that first year. I wonder if there's a partnership to be had there.
Yeah, I mean, the thing with the fee reduction, I'm just stuck on that, is like, okay, if we're talking about supporting small local farmers, certainly the wholesale loan or the wholesale fee amount probably should come down. But, you know, the cost of a tier 1 license indoors, $1,200, $1,250, outdoors at $750. You know, even if you cut that in half, it's money in your pocket. I don't want to diminish that, but it's not a huge amount of money. But I agree that any amount of money in this to keep the lights on, to pay the bills, is important.
I'll also mention, because this did come up in all of our focus groups and all of our conversations, and they all echoed the same sentiment. It wasn't just the tier 1, and there was also social equity licensees there. And there was a pretty strong consensus around this. Would grants or low interest loans be interesting? Yes. Would they consider pursuing them? Yes. But it always came back to like, well, it's year 4 now. Our licensing fees are now having this jump. It's nice from a business perspective that we've had time to plan for this, but at the end of the day, to your point, it's just money out of their pocket. And I mean, Hannah has it on the slide. It kept coming back to that. So I don't want to say that as a group they were dismissing the idea of low interest loans or grants. We did get some information that was valuable if they were to pursue those. What would be a dollar value? What would things you would, at the end of the day, use them on, use that money for, in supporting your business? But they did keep coming back to just keeping the money in-house was, at least in the moment, at least as part of the discussion, more valuable to them than pursuing low interest loans or grants. So
if more of the excise tax went to the cannabis business fund, that essentially the cost of the license fee could be part of the grant. Right.
Yeah.
And also, if we had more information about specific types of grants and award amounts and all of those kind of more concrete parts of that conversation, how would the conversation change? Because I hear you, Eric, for sure. Makes total sense.
I agree with what you're saying as well. Yes, I totally agree.
And we're working on that.
So we have this kind of graduated fee increases for social equity applicants where they end up paying 100% of their fee after 5 years. Is that too steep of a graduated curve, do you think? The thinking at the time was you're either going to sink or swim after 5 years. So you should slowly be having, at least theoretically, be more profitable, but maybe that should be extended or be a permanent, reduced fee for social equity and or tier 1 cultivators.
Based off of our conversations, they'd obviously be receptive to that idea. They did acknowledge the fact, like, we've had this amount of time, and as a business, we've had time to plan for this, but that doesn't change the fact that
Right,
after
sure.
that 5-year period, now we're looking at $10,000 or whatever the dollar threshold, or the dollar amount was.
And so the other thing that we recommended last year was to add eligibility for this kind of beneficiary payments or this kind of technical support to tier one cultivators. That, of course, it's only available to social equity applicants now. So that dilutes the kind of amount of money going towards social equity applicants. That's not really a question. That's just a comment. I think, if we were going to include tier one in that category, it would just have, the legislature would have to commit to doing more money.
Absolutely.
All right. I think we're good here, Hannah. Thank you.
I know we're running behind, so thank you.
Oh, you guys are good. This is great conversation. Okay, so the next theme that we were able to pull from the focus groups was inequitable market access. So basically what this looked like is that licensees reported a pretty big exclusionary practices in the retail sector, where dispensaries often either favored vertically integrated businesses or just any kind of personal connections that they had to the cultivator. A lot of the operators in the focus groups kind of describe the retail environment as cliquey, closed loop, like an old boys club, making shelf space very inaccessible, and they aren't able to kind of make those pathways in. One comment that came up that sticks out in my mind is there was one operator that was discussing when they're competing with these multi-state operators who have basically whole business units, made of salespeople who are going into the different dispensaries and spending hours with the retailers. And if they are a small farmer focused on cultivation, they just don't have that same manpower, the same resources, the same time to make these relationships. There's also was discussion around kind of predatory practices where these multi-state operators or bigger companies would go in and say, you can sell our flower and you can only sell our flower. If you are taking our products, you are kind of blocking out everyone else in the market. This was definitely shared a lot among outdoor cultivators, specifically because they said that they were kind of felt pushed about the quality of their product. It sounds like a couple of years ago, there might have been a not great growing season. There was some problems with the outdoor flower being sold, and ever since then, they have faced pretty strict scrutiny from the retail sector on getting that flower on their shelf. Something that was echoed a lot with the tier one cultivators was that without any direct-to-consumer pathways, there's no way for them to create those relationships with the consumer. They're not able to create those connections that have been seen in a lot of other places, specifically in Vermont and like the agricultural sections, where you get to know your farmer and know where your food or your products are coming from. So that was definitely a main sentiment of just not being able to get into the retail stores, their product, but then also tier one and especially outdoor cultivators not being able to get their product on the shelf just because of what they are growing, and feeling that there's no way for them to have a face-to-face with consumers to make them want to buy their product.
So no surprise with this, we've been hearing this, echoes of this from the very outset, even pre-market, that the way that it was structured is, without direct consumer, this is always going to be an inequitable market for the cultivators. I think that there are very heavy-handed things that the board or the legislature could do to solve this. But they probably have a whole bevy of unintended consequences. The things that come to mind for me would be limiting the ability of retailers to vertically integrate,
Or horizontally integrate seems to be the problem here.
Well,
Nobody can horizontal.
I'm talking about.
No. Sorry, I confused them.
Yeah.
Sorry.
That to me probably has all sorts of unintended consequences that come along with it. But certainly that comes to mind. One thing that was talked about early on and was mandatory for a while when the bill was being debated, but then became permissive, was around requiring that a certain percentage of people's inventory or menu of products come from either social equity or tier one cultivators. Again, makes sense in theory. Implementing that is difficult, and practically speaking, for the retailers might be challenging.
Depending on how you make the request of them to track, whether it's total product or shelf space or
Right.
That would be a whole conversation about how you.
I was thinking that you could just, most people have menus either online or in the store or both.
Right.
You could just require that there be a page for tier one cultivators, but or social equity applicants. But again, it's kind of like, I don't know.
I think if I recall, like that was only initially construed or constructed to be for the integrated,
It was just
like medical start, Head Start folks. And there has always been to my understanding, some push and pull between those businesses and the small cultivator community where neither one really wanted to do business with each other. I say that with a grain of salt, like I don't know everything, but was that doomed to fail beyond the good faith effort, but more so the clickiness or closed loop or whatever, the stuff that's really hard for us to kind of get a good finger on as a governmental agency and help businesses connect with other businesses in the market. You know what I mean?
Yes.
I'm not saying it's not worth trying to revive that now that we're a couple years in and there's a lot more options for retailers and cultivators to kind of pick and choose from who might align more with their value set versus how it was initially incepted at the beginning to just include 3 first mover medical dispensaries.
Anecdotally, it seems like most of the advertising is retailers. I wonder what the barrier is, because tier one cultivators aren't prohibited from advertising so long as they meet all the requirements. I wonder if there's a cost barrier there that prevents them from getting their brand in front of, or just the brand in front of people.
The thing that when we first did our market analysis, Andrew Livingston warned us about this problem very clearly and said that it's going to, in the outer years, 2, 3, 4, you're going to have a really, extreme gluts, cannabis gluts, especially around harvest time with all the outdoor cultivators we have. So I thought that, a good way to kind of hit the direct consumer benefits and to deal with these kind of oversupply shocks would be to have farmers markets that outdoor cultivators could participate in, and have those conversations directly with consumers, get their kind of brand out there, their kind of growing practices, sustainable growing practices out there. That to me is the less heavy-handed way to kind of thread this needle. It doesn't totally disrupt the model that we have right now, but
also to demonstrate that the legislature that more is the whole industry is capable of something beyond the traditional model.
I think we should also potentially say that there'd be a tax holiday for the farmers markets. It's just don't charge the excise tax for those sales. I think that
yeah.
I just feel like making.
Do you think that matters more than the possession limit? Not that I'm suggesting go to the farmer's market, buy a pound, but I'm just saying tax or no tax, you can still only walk away with a certain amount.
With an ounce. Yeah. Well, we can let them fight it out. I mean, one of the main reasons that the legislature was nervous about having direct consumer sales that were initiated by cultivators is they're worried about tax collection. And you need the point of sale systems in order to make sure that all those sales are tracked and that they're auditable and that everyone's operating above board. So maybe just eliminate the requirement that they have to collect the excise tax.
Well, they'd have to eliminate the collection of the excise tax, the sales tax, and the local options tax, depending on where it is. So it's
tax holiday.
It's a whole all around.
Nope, a lot of good.
But you'd have to
thought
get the
into it.
town that they're operating on board. You just added another layer of government there.
I will just say to everybody watching, you might have noticed some lights flickering on and off in our office, and Patrick did let me know that the office is having some power issues. So if we disappear
Oh, I wondered
completely,
what that was.
there's a lot of construction in this building right now. So if we disappear completely, it's not because we want to cut the meeting short, just for everybody's
I thought
knowledge.
we were all just really still for a minute.
So I want to make a point here real quick because I think it's worth reiterating from the conversations that we had with some of the smaller outdoor cultivators. And it gets both to the chairman's point and also Julie, to the point that you made as well. This kind of bleeds into the marketing and advertising piece a little bit because one of the concerns they had not only was like the shelf space and breaking through those barriers and the gatekeeping was their ability to kind of break through that since they don't have touch points with the consumers to break through, like know your farmer, know the product, build a brand, get people interested, understanding, educated, bought into like the specific outdoor strains, and being able to have that individual touch point. I think we did talk quite a bit about advertising, and I certainly think there is a financial barrier there specifically for those smaller outdoor cultivators to be able to do that. But not only do those farmer market help with the seasonal ebbs and flows of supply, but also gives them the opportunity, those smaller cultivators, to promote what they're doing, promote their products, and then hopefully have that translate for them to the more traditional retail space. But I don't want to say or lean in that understanding that there are still a lot of like considerations for the farmers market model. Like there are a lot of things that need to happen to administer that, making sure that we're doing it in a smart, safe way that's responsible. We're protecting public health and safety. I mean, there's a lot that goes into it, but there certainly could be a there. So,
Eric, do you think there's two like simultaneous marketing questions there? One, it's what the consumer knows about outdoor cannabis or sun-grown cannabis, generally speaking, compared to indoor grown cannabis, and then also each individual cultivator trying to establish their own spin on their value sets, their ability, their own material.
Yeah, I mean,
go ahead.
No, I didn't mean to cut you off. I do. I mean, it's no secret that like potency, THC is where the dollars are in the supply chain. And consumers in literally every state are preferring the higher potency. So there is a challenge to overcome there. But yeah, I mean, I think there is something to be said for those types of products. And I think there is a disconnect that we could start kind of putting those pieces together and people realizing they are good, high quality products. And again, getting to know the farmer, having that conversation could be really helpful to some of those folks that are looking for it.
Thank you.
Great. Well, just in the interest of time, should we just keep moving along here?
You can keep moving. Okay. And I believe this is the last bucket. So is capacity gaps in business operations. So I think this sentiment's kind of already been touched on before, but many operators were confident in their cultivation skills, but lacked the administrative and like operational business capacity to succeed in a regulated market. They brought up frequently like struggling tasks with like record keeping, invoicing, staffing, packaging. Basically everything outside of growing the actual plant and curing the plants. When we were talking to staff, they noted that there are like tutorials and written guidance. However, licensees don't tend to really like these resources and have requested a lot of one-on-one or live support that they are not always able to offer. And I want to make it very clear that these gaps are not seen as kind of like individuals' failings, but more of like a structural mismatch between like regulatory expectations and the realities of small operators. One sentiment that was brought up, I believe it was in the staff focus group, is one of the staff members was saying is that all of the really successful small tier 1 businesses that they were seeing was when it was a pair of people and one person could really focus on the cultivation side where the other person could focus on like the business regulatory admin side of the grow.
I will say that this is not all. I mean, obviously the regulatory burden is so much higher here, but working in agriculture before this is common through ag businesses too. People want to be with their plants. They want their product to be able to sell themselves, and they think that it should be able to sell themselves. And more often than not, they are right about that. But you've got to, do the other things that you need to do to actually get that product to market. And it's a constant challenge, and why we're trying to leverage the expertise in state from a business and technical perspective and a business coaching perspective to really take this community and translate some of those skills that are translatable, because it's not plant. There's some hesitation because people are like, oh, I don't know cannabis, I don't, but I've been trying to explain to a lot of folks in and around the ag support structures of the state. It's not that you need to teach them how to grow this thing. They're really good at that. It's all these other business skills that they could really learn a lot from you on. And so I think that conversation is warming, but will we get it in time before more businesses aren't able to succeed? I think that's where we're at.
Yeah. Just to add on to that, like this is something when we were looking at all of the different nationally the different kinds of programs, when you're looking at what they were really serving, especially outside of the cannabis and like at the greater agricultural community, it was either directly giving them money or helping them in like this capacity gaps in business operation, helping them with marketing support, helping them create compliant packaging and labeling, helping them with getting word out there of their product. So this is definitely not something that I would say is unique to Vermont. That is definitely a national pull, even outside of the cannabis community.
This might go more towards the previous slide than their current slide, but when I was at ag, I managed the USDA ACER grant for Vermont, which is all about maple marketing and how you can use USDA dollars to help sugar makers tell their story in a world where a lot of people are really good at producing that. And the way that we did it was a pass through to the Sugar Makers Association that did a marketing campaign around Vermont produced maple. And I see opportunities with outdoor sun-grown cannabis to make a recommendation to kind of put out, whether it's working with our own tourism and marketing sect of ACCD or putting out an RFP to get a Vermont-based marketing firm to kind of launch a marketing campaign around what the values of sun-grown cannabis can bring, and start to kind of unpack the high THC percentage, and is that really what consumers should be focusing on, so on and so forth. That certainly could be a recommendation that we put forward to the legislature.
Yeah. It seems like one of the just overarching themes is finding ways to kind of cooperate. I know that is from Dave's earliest point, is finding ways to kind of reduce the competition amongst this tier 1 cultivators, which, competition is healthy, but it's also sometimes a race to the bottom. So,
right. But there's very clearly spending a lot of money on overhead that could be shared.
And I would just say it's I'm sure it's emotional, right? Everybody wants to see their brand on the store shelf.
It's hard work.
It's hard work, and there's that gratification of seeing your product make it that far. But taking a step back and realizing what you do well and how you can get the support of others, I think is equal in that endeavor to understanding how your business can succeed.
But I like a public education campaign that highlights the fact that this is grown in Vermont. It's locally grown, that, how it's tested.
Maybe we took some of that for granted because we know that everything produced here is grown here. And I think everybody that's listening knows that too, but does the average consumer know that?
Correct.
I don't know.
That's what I'm getting
especially
at.
With the proliferation of hemp-derived products.
California did something like that, right? Yeah. They did
I know that we do it all the time for other sectors of agriculture in Vermont. Yeah. Or at least I have one example that I helped manage the money for. You know what I mean? So it could be done for sure.
I think one thing when our lab is up and running too, I really want to do like a why buy legal campaign.
That's what California did. Yeah.
Yeah. Like just I know Oregon did a similar thing, or not too long ago. Just test a bunch of random products that are illegal, test the illegal products, and just show the stuff that people are sneaking into those things. Yeah.
Had that on my list too. That's great.
All right.
Okay. Oh, I had one more. I'm so sorry. Navigating compliance and the regulatory interface. Licensees reported that compliance systems were confusing, time-consuming, designed for larger businesses. One concept that got brought up a couple of times was that the track and trace system was not mobile friendly, and that it would be a lot faster for them if they'd be able to pull it up on their phone and be able to walk through their crops and be able to do it on a mobile device. Packaging and testing costs often consume disproportionate share of revenue, with some operators losing money on entire harvests. We already kind of touched on that with the testing costs. And then staff emphasize the need for a non-enforcement technical assistance team separate to provide separate education from enforcement. There was, both from the staff and the licensees, this want for more education from the CCB that didn't kind of lead to enforcement actions. A place that they could go and to ask questions and to get advice without the fear of getting a fine or having someone come through and rip apart their business.
Yeah. And I think the farm forest liability model might be a good avenue there. And I know not everyone wants to just sit down and spend like 3 Saturdays taking a class, but the state colleges have a class that we're going to hear about next week, right? A little bit.
Not next week, but in October.
In
Yeah.
October,
Yeah.
Okay.
I don't know how costly it would be to put a mobile option on track and trace. I genuinely don't know, but just for everybody's frame of reference, we have to think about altering, the contracts that we have for the folks that are helping us do that development and what those costs are. And that sounds boring and bureaucratic, but those are things that we have to consider when we get great ideas, no matter what the idea is.
If we have to go outside of our agency to do something, we have to partner on that agency's timeline.
Yep.
Cool. All right. Was that the last one?
That's the last one. I have one last slide that we'll go through, just thinking through some stakeholder tested support concepts. I mean, I think a lot of them you guys were already kind of getting at as we had this conversation. Operating cost relief, especially for testing and fees. I'm seeing something like that Colorado model of where if they have extended compliance for a long time, being able to reduce those testing costs. And then again, with the preference of any way to lower fees instead of exploring those grants or loan programs. Getting any kind of one-on-one business advising or compliance coaching. That was something that they were very interested in, being able to have a consultant come in and give business advice, either that being a person from the CCB or if you guys are hiring outside. They did have a very strong preference for it to be a Vermont business, so that they know the market and the regulations that they are working with. Marketing and branding assistance tailored to the Vermont cannabis rules, especially with the tier 1 cultivators. That was something they were very interested in. Julie, I think as you had mentioned, I think there's a disconnect of them having an idea of how they would want to market their brand and then being able to actually execute that and get that out to market for people. One idea that came up a lot and was heavily supported is a peer mentorship or structured networking opportunities through the CCB. They were very interested in seeing live in-person events hosted by the CCB to be able to connect tier 1 cultivators and retailers, for example, to help them get that, to open up that closed loop that we talked about before. And then education resources for contract literacy and risk mitigation. There was some conversations around how there's been some predatory agreements in the marketplace and that some of these smaller operators don't have the resources or the understanding of contracts to be able to set themselves up for success. So any kind of resources that the CCB could provide is if that's even like model contract language or classes to be like, hey, if you're doing partnerships, here's kind of what to look out for. One other thing that didn't make it to this slide, but you guys were talking about is having some sort of marketing campaign around outdoor cannabis, around like sun-grown cannabis in Vermont, I think would be very successful here. I think that's also an opportunity for the CCB to work very closely with the tier 1 cultivators to see how they would want that to be marketed. And that I see that as kind of a two-pronged of it would be a campaign for the public to get them to want to buy sun-grown cannabis, but then also targeted towards the retailers of, hey, even though there might have been a bad crop a couple of years ago, here's how you can market it. Here are the benefits that you could pass along to the consumer to increase interest in outdoor grown cannabis.
This has been great. Hannah, thank you. And Eric, thank you for the work that it took to generate these recommendations. I can cut you loose if you like. I mean, I think our plan at the board is to take what we've heard today and continue the conversations. I know you guys were acting in your lane, but Julie, Kyle, and I have been doing work going around and meeting folks and having some of these conversations, especially with the kind of external support structures that exist for agency, industries other than cannabis that exist in Vermont already, and see what their appetite is for including cannabis in their portfolio. So I think our plan is to have another meeting similar to this in 2-ish weeks.
So at our other special meeting
Yeah,
day?
our other special meeting that day. And then one more before our October board meeting. So that we can kind of start to coalesce around what this report's going to say.
Yeah.
So great. Thank you. Thank you so much. I'll let you guys go. You don't have to stick around. We're going to do one more public comment and then adjourn.
Great. Thanks so much, everybody. Good seeing you.
Thank you.
Thank you.
All right. So we'll just do public comment like we always do. And the thing is just be able to join via the link. So just raise your virtual hand if you'd like to make a comment. And I'll start with Michelle.
Hello, thank you for having us. As always, I really appreciate these opportunities. I did want to ask a question real quick, and I'm not sure if this can be answered, but the licensing fees, are they supposed to produce revenue, or are they just supposed to cover the administrative fees that go into it?
The latter, although they don't do that currently. So the legislature kind of made a conscious decision to not charge astronomical fees, which is what really would have needed to happen in order to cover the kind of licensing and compliance and the kind of keeping the lights on here. They decided that, generally speaking, a fee is supposed to cover the service that it's providing. They decided that the market would be too inaccessible if they actually did that in this instance. But they're not generating additional revenue.
Awesome. I appreciate that clarification. The main thing I would like to comment on actually wasn't brought up at all is the medical fee. I know it's only $50, but someone who makes just above the Medicaid limit, and has to have Medicare, 80-year-old who, has health issues, they are literally going to be choosing between paying for their 20% copay that Medicare makes you pay and this $50. The Medicare threshold was just lowered or raised, but it still leaves a lot of people who would not be able to afford all of their bills on top of a random $50. I would like to propose that the fee gets reduced to $25 and that if they make below the Vermont federal poverty limit, they do not have to pay at all. And I know clearly that was why I asked about the revenue. And if this means, I'm sure some of my colleagues aren't going to be too pleased with this, but if this means we have to increase product registration by $1 or 50 cents to cover that cost for these medical patients, I think we should. It's not their choice to be sick. They're not profiting off of this. We should be able to make up that difference and make it so it's not as large of a burden. I know $50 doesn't sound like a lot to a lot of people, but to these sick people, it means the difference between groceries and not. And the market and campaign idea, I think, is a great thing, and testing some of the products that are on the black market. 3 years ago, we bought some Stoner Patch Kids, the black market, 500 milligrams per package, 50 milligrams per piece, 10 in a package, paid for them to be tested, and they only tested in at 24 milligrams. So, and that was a huge eye opener for a lot of people when we shared it. And I think if we could do the exact same thing to show the non-accurate dosing on top of what lovely pesticides and pathogens that might be in the flour because it's not tested, I think that would be a really good resource for people.
That is
Yes.
a really good public health campaign. Right
Yes. Yep. Yep.
Wouldn't that mess
Thanks,
with the
Cindy.
advertising aspect though? Because we're not allowed to advertise, so we would really only be able to put it in dispensaries and not, a news article or stuff like that, right?
I think
Well,
we're talking about
educational.
consumer education
Yeah.
versus inducing sales.
Yeah, there's a difference, I think,
Yeah.
in this aspect, but it would, it does intersect potentially with advertising laws.
Because
Something
we're
to figure out.
inducing sales, but we're inducing no matter what the sales are happening. Let's get them in the legal market.
Thanks, Michelle. Dave?
Yeah, thanks. Some great ideas, Michelle. I'm just thinking about, the conversation earlier, some really great ideas put out there, good suggestions, stuff to follow up on. The conversation, that you had about, like the keep the lights on money around reducing license fees. Now, I'm clearly not against reducing license fees, but, just thinking about the political reality in 2026 in the legislature and how there's just not going to be any money. I've already been told by appropriators that, we shouldn't be coming to them with asks that don't have a funding stream attached to them. And so I think reducing funding streams is going to be very, very difficult this year. So, while I'm not trying to discourage you from making those asks, I think, some focus should be put on sort of other levers that you have outside of fees that cost operators quite a lot more than the fees do. And I think there are things that you can, including like reducing the regulatory burden, a lot of discussion around advertising, of course, is one of the regulatory burdens, but there are others. And also pursuing policies that support price stability, right? As we hit, third anniversary of sales, in other markets around this time, we see a very sharp decline in prices, and so anything that we can do to maintain price stability goes, I think, a lot further than a couple of $100 in a fee reduction. If we can prevent the price from plummeting 50% a year, and then. We talked a little bit about the one license rule before. In a normal market, right, in a non-cannabis market without this one license rule, where you have a contracting market that's saturated, you would start seeing roll-ups, right? You'd start seeing businesses buy each other, just as like the natural progress of capitalism. And we don't have that exit ability for operators who are struggling, right? Their only option, maybe not their only option, but the option most available to them is to just call it quits and take the loss. And I think as we go into 2026 and we see the impact of this fall harvest that by all accounts is going to be really, really strong, I think it would behoove us all as an industry, as the board, to start thinking about long term. Do we need to make some kind of modifications to that one license rule in order to help people not lose their house, right? So, and look, I've been a very strong proponent of the one license rule. I've been trying to help your staff, strengthen their ability to analyze when people try to skirt the one license rule. I want, you know, I think it's important for this industry to not be overtaken by a small number of large operators. But there's probably some kind of middle ground if we put our heads together and think about what it is that we want to accomplish. I will say I was very concerned about the conversation about insurance. You know, the idea of not having cannabis business insurance so that your homeowners doesn't cancel you is something that I've been advising my law clients against for a long time, because if you go that route, not only would you not have coverage for your cannabis losses, but if you had a homeowner's loss, your homeowner's policy might not pay because you didn't disclose to them that you're running a cannabis business in violation of the policy, right? So there are homeowner policies available to cannabis growers, to home-based businesses. You know, we've been able to find those for my clients. They're not outrageously expensive at lower levels of coverage. So I would not want you to try to like go back in that direction of letting people not have insurance. That's really, really scary. And I think that covers my thoughts from this meeting. Thank you. It's very educational.
Yeah, thanks, Dave. And part of, I mean, not that like, you know, these consultants have any sort of magical knowledge that you guys who are boots on the ground in Vermont don't, but part of their market analysis, which they'll be submitting by the end of the year, is also going to include some scenario planning in the event of kind of market consolidation or failures. You know, it's just some strategies that the board can consider depending on kind of which way things go federally, or, you know, if certain policies around potency caps are lifted, what does that mean for supply and demand? So it'll be interesting to kind of compare notes on those kind of scenario plannings. Jeffrey?
Thank you, Chair. Thank you, Board. Looks like we lost our guests, but I appreciate this discussion and all who have commented so far. You know, it goes without saying, you know, reducing regulatory burden, you know, clearly the charge, the directive of the General Assembly for fee schedule, you know, reduction of licensing fees. These are all great things. Let's pursue them. You know, Colorado reduction or some forgiveness with testing for smaller production. This is all great. Let's do all of these things, like I just said. But what we are circling here, and I think that the problem is very well known. We've identified we have a systemic issue. And at the end of the day, you know, years can go by and we can work to achieve these policy wins to reduce burdens for small producers, but we will not be addressing that systemic issue, and we will be left with that. And so as we have this discussion, and I recognize that, you know, the chair mentioned this the other week, I think actually in the last board meeting, and that is, you know, fees alone will only go so far in providing the missing equity that our small producers need, and also the foundational issues that we're all facing right now. And I know the board is aware of this, but I also feel the need to somewhat defend farmers for a moment. They know how to pay taxes. I don't think we should be using such broad strokes when it comes to these sentiments. What I see is a significant portion of our licensed cultivators. They're familiar with a sales and use tax. They've had a nursery for trees or shrubs, or they sell vegetables or fruits for years. This is not foreign to us. These, I want to say, more political obstacles are not insurmountable. And so as we take this time to talk about these other issues, and I think that we should advance them, at the same time, I think it would do us a disservice if we were not also including those foundational issues. We're at a moment right now where it does not matter how good your product is. We have literally legacy artisans who cannot find shelf space. I know that we're aware of this. we need to address that. I look forward to future discussions. Thank you.
Thanks, Jeffrey. Alex?
Can you hear me?
Yes.
Just wanted to make a couple of comments. It's been a good discussion today. I want to echo what Jeffrey just said. And then I also thought that Nick's comments earlier in the first set of comments were good on having more flexibility in the size of the multiple tiered license. That seems like also a good idea. There also seemed to be a lot of discussion today that I kind of agree with what Jeffrey said on, tier ones, not being able to do packaging or all these other things and wholesaling and things like that seem to be doing a whole lot of lifting. But when you add in packagers, wholesalers, everything else, that's another person that wants a piece of the pie. And so just saying, oh, well, you could do this other thing doesn't necessarily save money, especially when there's crazy minimums to a lot of things. On the retail side, I also want to echo what other people have said about shelf space. We've run into lots of stores that stock either one brand or one or two brands. So some sort of incentive for retailers to stock more brands, maybe lesser fees or money back somehow, or some sort of incentive to say, hey, if you stock more people, especially tier one and social equity, you get some sort of deal. Would be something to talk about. As far as our biggest barriers, other than just what's already been discussed, I'm going to echo the stuff about the insurance, especially the property insurance, because we're home based as well, and that has been the toughest thing, the most expensive thing, and the thing that's probably going to make us a lot harder to get profitable. So I liked the thought of a co-op insurance or something like that, something more Vermont based, because I do keep hearing from different insurers that Vermont is the only one that allows this home based thing, and that's why it's so expensive. It's because nobody else does this, etc. And as far as money goes, I'd like to throw out there again on getting a portion of the taxes that are being collected from the cannabis excise tax back into the cannabis community. That's it.
Great. Yeah, thanks for those points. Myra?
Hi, can you hear me all right?
Yes.
Yep.
Awesome. My name's Myra. I'm a tier one outdoor cannabis cultivator. The name of my business is Hidden Leaf Homestead. I had a couple points to make about several different topics that were brought up. The first one being insurance. It's just me. I'm the only person that works here. My insurance is general liability. It doesn't really cover much of anything except for somebody getting hurt while working. And if I'm my only employee, I don't see myself suing myself. And the cost for my insurance is almost $900 a year. And it is due at the same time that my license fee is due. My license is $750 each year, but let's not forget that we also have a local fee on top of that. That makes it actually $850 a year. So that's almost $2,000 that I need to come up with at one time. I just think that having to pay for general liability insurance when I have no employees is a complete waste of money. The next topic I wanted to talk about was the tax issue. I have owned a business before in another state, a photography business, and while my labor was not taxed, my products were, and I collected local state tax and submitted that quarterly as necessary. Currently here in Vermont, You know, I'm my only employee. I manage my website. I manage my social media. I cultivate. I trim. I deliver. I do my own marketing. Pretty much anything that is needed for this business, I take care of. So thinking that I cannot collect my own taxes is a bit of a insult, I think, to my intelligence and the intelligence of other growers that do know how to run their own business. As far as advertising goes, you know, being a small cultivator, it is an additional expense to do that. And also with the regulations, particularly having to prove that it's an audience of 21 plus audience as far as age goes is particularly difficult. But I also am curious as why why I would really want to advertise when you know, I have local community members that are already coming to me wanting to buy my product without having to advertise. It's just because they know me and they want to buy my product. But there is no place that they can go to buy the products for me that they want. I have one local retail store that wants nothing to do with me, and I want nothing to do with them. And the other local retailer that I work with only will buy bulk sativa products. I have plenty of neighbors and people around me that want more medicinal products, which I do have, and I cannot sell them to them. So what would be the point of me advertising? The retailers that I work with, I currently only work with 5. One only buys bulk sativa, as I mentioned. One is vertically integrated and has only placed one order with me so far this year. One is extremely supportive and has placed multiple orders, but is 3 hours away from me. So that's a 6-hour drive in a day when I go to see them. One of my retailers thinks that flour that's more than 8 months old is bad and not worth buying. And then I have another retailer that has moved away from purchasing bulk flour and is now prepackaged only. So, I mean, as you can see from my examples and the examples of others, I really need the government to get out of my way and let me sell my products directly to consumers. I've sent an email to legislators, to the CCB. I've copied the VGA and rural Vermont with a process on how we could implement that, and I have received 0 feedback. Not this is a great idea, not that it's a bad idea, not that we can't implement it for these reasons. And I really, really would like to work with you on how we can implement direct sales for small growers. I also want to make a note on product registration that it still takes entirely way too long to get product registration approvals. I know that the board has mentioned that I believe that I've heard you mention before that it shouldn't take more than a week, but it definitely does take more than a week for those to go through. So I'm basically dead in the water for weeks while I wait for my product registration to come through because I don't want to work on packaging and labeling, which I do myself in-house, in the event that the CCB comes back and says, well, this needs to be changed or that needs to be changed. Then I will have done a ton of work and have to go back and redo it. And that is all the comments I have for today. I appreciate you guys listening to me, and keep up the good work. Thanks.
Thank you, Myra. Thanks for sharing. Am I right? Are we going to do a peer networking event on farmers markets in October, just to kind of like get a sense of where people are and what the challenges are and what a proposal might look like?
That's my understanding, but
Okay. Yeah.
hopefully at our next meeting in an hour and change that will be a larger announcement from the folks that are organizing that.
Yeah.
Andy, you're our last commenter.
Thank you, everybody, for today. This was actually a really, really good session and very much appreciated. A couple of comments. we're a retailer down to the roots in Chester, Vermont. We're also a minor manufacturer in Chester, Vermont. Even as a retailer, we absolutely agree with Jeffrey's comments earlier that preventing the unlawful sale of cannabis is a huge issue all over the nation and absolutely here in Vermont. We see unlawful sales advertised on Instagram that we really would love for the CCB to be monitoring and reporting and shutting those down so that people will actually buy legally, helps the retailers, helps the cultivators, and was wondering if the CCB would consider adding a place on your site for people to report when we see these things anonymously. Helps everybody. I know you can't answer. Regarding fees, the newly required upfront fee payment for renewals before approved by the board for renewal is hurting every single licensee, not just tier 1 and social equity, as most licensees in the state are having cash flow issues. It's transformed the license renewal fee to an application fee, which we don't think was intended. We have a recommendation. We think you should go back instead to charging either whether it's go back or revert to a $1,000 application fee that's not refundable. That is required to go in initially. And then like it was before when we were initially licensed, the balance would be due after approval. This new practice is also in direct contravention of the CCB's desire to have our applications complete way before the 30 days before a license expires. I mean, as biz folks and custodians of our money, and especially if we also have investors' money, outside investors, we're required to manage our cash prudently. So applying early and paying early doesn't make sense. And so I don't think you realize that you've now created this conflicting desire, apply early, but you have to pay early. Why would we ever do that? I'll have more comments for other constituencies later this afternoon. We hear the farmers on wanting to meet their customers. We're surprised to hear this. At Down to the Roots, we encourage retailer pop-ups, meet the farmers. We advertise for this in our local papers. We get them pre-approved. We encourage all retailers to do this, and we encourage all of the farmers to ask their retailers to do it. Some who are on the call today have been at our store, and we love it, and our customers love it. We don't agree at all that cultivators should sell directly to customers, as that'll just further exacerbate the oversaturation issue, which will just drive down prices and hurt everyone, probably the worst, the smaller cultivators. We're also not allowed to grow with a retailer's license, so why should one license get to do what we're licensed to do, paying a ton of fees for that, and everyone else required as a retailer? However, we understand the farmers' concerns that the current retail moratorium hurts them when there are markets that don't yet exist. We agree with the moratorium in the oversaturated areas. We are in one of them, have been hurt tremendously by it, but we do have a suggestion. And that would be to allow new licenses in current non-served markets only, and only if a new retail store or dispensary were to be 25 miles away from an existing one. This could help the entire industry, help all the growers, all the manufacturers, and then not further hurt the current retailers who are really hurting. Last but not least, totally agree with the state or the CCB, whomever, doing advertising or PSAs that end up being advertising and using some of the excise taxes for that. I won't go into more. It sounds like the CCB agrees with that too. We highly want to encourage that. I think it's a wonderful idea, and it was part of our comments. I won't go further because it sounds like we're in agreement. Thank you again for this opportunity and for the meeting today.
Yeah, thank you, Andy. Thanks for sharing that. And yeah, we will be meeting again in about an hour, and we'll have more public comment opportunities there if there's other issues that aren't kind of specific to this topic. Happy to hear them. And yeah, I think our plan is to keep working at this. My hope is to have a draft, hopefully at least an outline to kind of review in October, so that we can really just meet our deadline in time for the legislature to actually act on it next session. So really appreciate it. All you guys sticking around to the end. I know we went a little bit over, and we'll see you in an hour.
Thank you.
Thank you.